In today's video, I am going to be breaking down my picks for the top 5 Nasdaq stocks to buy right now. These are quite interesting companies, and I've got some really interesting reasons as to why I'm buying them right now. So let's get down, let's check them out. Some of them I'm not buying right now, I'm going to wait, but we'll get into that a bit later. Nvidia is a very interesting company. NVDA is their ticker. Currently, they're trading at $300, and I'm really kicking myself for not buying it back many years ago when it was $11, and I was thinking about it, and I never did. It does pay a very minuscule dividend, and I would just, at that point, just reinvest it, to be honest with you. However, at the same point in time, they do actually raise it, which is quite interesting, even though it's so small. They do have massive volume right now of about 31 million shares traded every single day. So for us, we're probably only going to be buying 10 to 100 shares of this at a time. That's really nowhere close to that, so you're going to be able to get in and out of this stock very easily. If we look at the 5-year chart, we can see that it's just absolutely blowing up. And remember, this is actually a better stock to buy over the last little while than Facebook was. Don't get me wrong, both are great stocks, but this was about $11 to $15, I think it was, when Facebook had its IPO. Facebook IPO'd at, as we know, around $40. It was $38. And Facebook is nowhere close to that multiple since then. So, of course, this was a much better buy. The only thing that gets me is this recent explosion. And we can really see it on the 1-year chart. This ridiculous uptrend is crazy. It's starting to stabilize slightly. And we had a little bit of a gap up there. So it may actually drop back down to about 260. And I wouldn't be surprised if it did. However, at the same point in time, this is still an interesting stock to get at this point. I just wouldn't be going all out to get it. I would be buying small bits at a time because I feel that every time there's a gap up, there's usually a fill of that gap, which means that it's going to drop through that gap point. And if we look at the MACD, they're starting to converge. So at that point, when these two converge, usually it's going to be a little bit of a downtrend. We can see that this blue line is starting to get near the top, and same as, I'm colorblind, the green line. So either way, as we can see, this is at the highest point it's been for a long time, and anytime that happens, there's usually a little bit of a downtrend coming up very soon, so it could be a good buying opportunity soon. Now, they actually do raise their dividend quite often, but recently they haven't, which is kind of interesting to me. It could be just because of the pandemic. However, this trend has gone back to about 2018, but even before then, they would normally be raising it slightly. So even though this is basically on pause for raises right now, we have to remember that when it comes to graphics cards, they're going to be huge coming very soon. And as we all know, there's this new Web 3.0 thing when it comes to Mark Zuckerberg and Meta or Facebook. And if that's the case, and if that actually works out to actually be true over the next 5 to 10 years, well, guess what? That is very graphic intensive technology, which then needs more and more graphics cards. That's why Nvidia's on this list. And if we look at the earnings, we can actually see some pretty fantastic earnings. We can see that they have beaten their quarterly estimates every single quarter over the past year. And when we look at their revenue, it's going through the roof, especially in 2021. However, when we really analyze this, the only issue I personally have with all of this is even though revenue is going through the roof, earnings is still stagnated with 2019. So in my mind, this may look very good, but that is slightly concerning. However, they are probably really heavily investing in new graphics cards, so it kind of makes sense. Next is Meta, which is Facebook. And from there, what do we see? Well, first off, we can see that, of course, they have an average volume of 20 million shares being traded every single day. And their PE ratio is not ridiculously high like it used to be back when they IPO'd and a few years within that time. So at this point, it's actually cheaper than it's ever been. And the growth opportunity if this whole meta Web 3.0 thing actually works out for them, then this could literally be the future of the internet all in one company. Now, it actually kind of makes me curious because when we hear of Web 3.0 talks, when we hear of Mark Zuckerberg talking, he says it's going to be decentralized and all this stuff. But when you literally have an entire digital world ran by one company, which is ran by one man, that is centralized. That's not decentralized. So watch the wording, because we have to really read behind their words. However, for a stock standpoint, if this whole world is ran by one single company, guess what? Their stock's going to go even higher through the roof. It's going to be ridiculous. And when we look at their chart recently over the past year, they have had a little bit of a downturn. Obviously, there's been some bad news, and now they're starting to pretty well level off. But something to really keep an eye on is, that little upside down head and shoulders, which usually means up, up, up. And of course, the MACD crossed back when there was all of that volume right there. Now, that is interesting because it crossed as soon as it was near the bottom of that bad news. Since then, it's been slowly crawling back up. However, it's not going into ridiculous levels yet. So this could have some good potential to run, and that's actually why I'm looking at buying Facebook right now. Or should I say Meta? Oh, Meta. And if we look at the 5-year chart, we see this all over the place. We can see, of course, when it bottoms. And, of course, one more time here. We see it when it bottoms, how the MACD crosses, and then slowly recovers until it gets to ridiculous levels, and then it falls back down again. It's a trend that we can see over and over and over again. And when we see their revenue, we can see that they beat 4 quarters in a row, which is no big surprise. We've seen that their revenue is steadily growing year over year over year over year, and their earnings are also going through the roof as well. Now, this is 2020 numbers. However, it's going to be very interesting to see what happens into the future because they have a lot of potential. Now, this is not because I like Facebook. I actually desperately hate it. I hate how their customer service is non-existent, and if you're a business trying to figure out how to use the damn platform, there's nobody to really talk to, and all they have for customer service agents is advertising sales. It just makes me so mad. Anyways, let's get down to another company because I have massive rants about Facebook. Next is AMD, and it's another company I'm kicking myself for. So basically, I own this company from about $2 or $3, and I ran it up to about $6 or $5.50, somewhere in that range, and then I sold instead of doing what I do now, which I would have sold half. And now it's at $146, trading at 51.5 million shares every single day. I currently don't own this stock, but if this meta world actually happens, then they sell graphics cards, and guess what's going to be in demand? Graphics cards. So because of that, and also the chip shortage that we currently find ourselves in, then this looks kind of interesting. And of course, over the past 5 years, it's just absolutely gone ridiculously through the roof. Again, another gap up. We're seeing the MACD near the top. This is going to have a little bit of a shortfall. I think it's going to be falling just a bit, if not a little bit more. It could probably retouch just over 115, 110 in that range. And once it does, it's going to be an interesting buy. However, if it keeps on going to stupid prices, then it just keeps on going to stupid prices. Eventually, it's going to drop back down. Anytime that there's gap ups, that's usually when it's going to fall a bit. And we can see that there was a gap up on the 1-year chart. And we can also see there was another gap up there on the 1-year chart. So it never totally filled that gap there, and we don't usually see a total fill. However, at the same point in time, we did see a gap here. It's bounced off that level a few times. So if it drops below 140, that's when you would start seeing it probably retesting about 120 something. Their earnings are great. Their revenue is fantastic. Their earnings are stupid amazing. Revenue going through the roof. And then there's the earnings, which, they made a lot of money, didn't they? See, the thing with AMD is they always used to play second fiddle to Intel, and then they started getting into the graphics game, and they always played second fiddle to Nvidia. And it just so happens to be one of those companies that people said there can't be more than one top company in this sector, and they used to always get destroyed. They used to make okay graphics and, of course, processors. They've gotten a lot better recently, so it's quite an interesting play. They're kind of the underdog story, which looks like they're starting to come away with being a winner, which is interesting. Next is Costco, and there's a few reasons behind this. Of course, Costco has a lot of momentum on its side right now. However, Christmas is coming. So Christmas is coming. The virus may be coming back, and there's going to be the whole toilet paper thing probably once again. So with both of those things, Costco probably will do quite well, especially the fact that with all of these companies like Costco, they're going more digital, which again means less overhead. They do pay a dividend that is very small, and anything that's below 2%, in my opinion, you just reinvest if you're younger. But either way, volume of 1.7 million shares is nothing to be shy of. That's a very strong company, very easy, very liquid to be able to get in and out of. Over the 1 year chart, it's a quite interesting chart, to be honest with you. So when we start seeing this, it's near the top of its trend line in a way. And what that usually means is it could actually slightly fall. So if we actually make a line right there, and then we make another line lined up like this, we can actually see that we may have a little bit of sideways trading action, or maybe a little bit down. Either way, this is not probably going to be going in too many directions anytime soon other than sideways or down. And when it does, at that point in time, it's going to be a good buying opportunity, probably before Christmas, because that's when all of their fantastic numbers come out. However, if you go to the 5-year chart, if we draw a line here, and then we draw another line right there, we can see that they broke out of that trend that they had going very recently. So that could mean that they may have still some room to grow. So keep that in mind. They do pay a dividend, and they also raise their dividend quite often. And then they also apparently had a 10-cent dividend that they went back down to 7 and 7.9, which is kind of interesting. Maybe it was a special dividend because it was December and companies like to do special dividends. I wasn't paying attention to it back then, so I should probably research that before I make a video. Which leads me into my next point, which is you should never trust any random person on the internet. Do your own research, because we, as internet people who try to tell you what to buy and what not to buy, we may have motives that are on our side. Personally, myself, I'll tell you if I own a stock or not, and I do not own Costco. Now, when it comes to their financials, they did have one missed quarter, 3 beats, and the beats were pretty solid. They also have solid revenue growth, and their earnings are okay, I guess, but it's the revenue growth. Rev is king, let's face it. I also personally don't shop at Costco. I disagree with the fact of needing to have a membership just to walk into a door somewhere to shop, to spend my money there. It's different when it's a workout place because you're going there to work out and you're actually using the place. Meanwhile, with Costco, you're just basically paying to get into the doors, which it's not my thing. Next is Tesla, and of course Tesla is one of my favorite companies. It's not just a car company, it's also a solar panel company. I do own this stock, and it trades at 23.5 million shares on average per day, which none of us are going to be buying probably 2 million of these shares a day. So at that point in time, you're safe to say that it's a pretty liquid stock. And from there, we can see that the PE ratio is ridiculous, but then again, so is pretty much every other electric car company, so it doesn't really matter at that point. We've had just a massive run. I was playing call options during that time, which was a very fun time. And then, of course, we had that nice rounded bottom where, of course, now it's exploded to the upside. There's been some downwards pressure of Tesla, which is no surprise. We can see that right here on the 1-year chart. You don't see it on the 5-year chart. And, of course, it's because Elon Musk is selling shares. He needs to get money and capital to pay taxes. So much for billionaires not paying taxes. But either way, that's a reason why it's going down. So, in my opinion, it's just a fantastic buying opportunity. Anytime something like Tesla goes down, it's a great buying opportunity, especially when you're looking at like a 10% drop, 20% drop. You just buy. In my opinion. That's my opinion. Not everyone's opinion, but it's mine. As we can see, their revenue growth is just ridiculous. They've had one full year of positive earnings, which is fantastic. They've had 3 out of the last 4 quarters as beats, which is what you want to see. We've been getting some crazy news out of Tesla land. The crazy news being that Hertz is going to probably order 100,000 cars, and then there was a transport company that said they are expecting their transport Tesla trucks to be coming in before the end of the year. Who knows? I doubt that's going to happen. It's probably going to be the end of next year. But either way, when it comes down to it, they have more orders than they can fill. They have more stuff as long as they can get processors in. To be honest, they're able to get cars out there, killing the car numbers, but the reason for that is because they're using the same processors as they would normally be using in their solar panels and their battery packs, and they're moving that production over to the cars. So now that's stalling out the other battery and solar panel production, which sucks for companies and people who are buying that stuff. But this is not just a car company. They also sell software to be able to help the companies who actually deal electricity. So, for example, Hydro One here in Ontario. Hydro One is actually a buyer, from what I've read. This is obviously not confirmed, but from what I've read, they're a buyer of Tesla batteries very soon. And many other companies as well are doing the same, because there's going to be more wind power, more solar power being used, and obviously when it's not windy or sunny, you need to have batteries to be able to back up the power, to be able to use it at nighttime and things like that. So they sell the software for that, they sell the batteries, they sell everything. It's basically a complete company in my eyes, but right now it's a car company. In a year or two, it's not going to be. Well, anyways, that's my take on these stocks. What are yours? Leave a comment down below. I would love to hear your thoughts, and I'll see you guys in my next video.